Is the equity risk premium too tight? This is a great question for anyone invested in equities or any other risk asset. At first glance, the traditional measure of comparing the S&P 500 earnings yield versus the, say, 10-year or 30-year Treasury nominal yield, by that comparison, the equity risk premium is historically tight. For example, the equity risk premium might just be around 1% if you use some broad measures such as, for example, 200 earnings per share on the S&P 500 divided by, let's say, 4,000, that would only be 5%. Since expected earnings for 2023 are a bit higher than 200, say 225, you're looking at a little bit more than 5%. Now you compare that to the 10-year Treasury yield, which is currently 4% approximately, you're looking at a very slim, approximately 1% plus equity risk premium. So you're taking on additional risk for 1% versus the risk-free rate. Now, the really important question to ask is whether the nominal yield is the correct measure, because some might argue that you should be looking at the real yield instead. So if you look at the 10-year TIPS yield, for example, with inflation expectations still low, perhaps unwarrantedly too low, but they are, inflation expectations are between 2 to 3% 10 years out. So the market believes that inflation will be brought under control. The 10-year Treasury yield is, say, 4%. So, in that case, the real yield perhaps is not that high. Say if inflation expectations for 10 years are 2.5%, the 10-year Treasury is at 4%, then the real yield is 1.5%, which looks a hell of a lot more attractive. The S&P 500 earnings yield will look a hell of a lot more attractive, rather, in that case. So this is a great question, and it's very interesting to contemplate because, after all, the equities earnings yield, equities are a real asset. Their earnings do historically grow, and typically in most periods higher than inflation because companies have the ability to raise prices and keep up their profits with inflation. So it is a real asset. It's an interesting question that is currently being debated, and it's up for you to decide. If you have a comment or thoughts on this topic, please leave us a comment below. And of course, check us out, Hauseit.com, to learn more about how you can save money when you buy or sell property in New York or Florida. You can save 6% when you sell with a Hauseit buyer closing credit, and 2% back when you buy with a Hauseit buyer closing credit. And 6% when you sell with a Hauseit agent assisted FSBO listing. My name is Chris at Hauseit. We hope to see you on the next one. And by the way, as a blooper, note that we film all of these with one take, no editing, so we hope you like what you see. Thank you so much.